This Thanksgiving, we'll be back to, hey, you get 2 turkey legs this year because we bottom October 5th, whatever. I'll give you a date. We bottom October 5th. Maybe we've already bottomed, but October 5th is when we turn back up. Crypto spring will be here. We don't go straight to 150, but, the next stop between crypto spring and crypto summer will be, that 150 range. And then next cycle peak, which is in 2020, halvings in 28, so 29. So in 2029, the next cycle peak, 4s, probably has a 4 handle on it.
For years, Bitcoin has followed a pattern that almost seems impossible. Every major correction triggers the same headlines, the same fear, and the same predictions that the experiment is finally over. Yet every time, Bitcoin survives, recovers, and eventually reaches levels that most people thought were impossible just months earlier. Now, veteran investor and Morgan Creek Capital founder Mark Yusko believes the market could be approaching another one of those pivotal moments. Yusko has spent decades navigating financial markets through booms, crashes, and economic cycles. And despite the uncertainty that continues to dominate headlines, he's making a bold prediction. He believes crypto spring is approaching, Bitcoin could eventually reclaim the $150,000 level, and the next major cycle could be significantly larger than most investors currently expect. But perhaps even more interesting than the price targets is the reason why he believes so many people continue to miss Bitcoin's biggest moves. In this interview, Yusko explains why trying to perfectly time the market may be one of the costliest mistakes investors make, why inflation is quietly eroding wealth faster than most people realize, and why Bitcoin is evolving from a speculative asset into something much bigger. Every cycle, people make money in crypto. Every cycle, people lose it to hacks, exchange collapses, and compromised accounts. iTrustCapital's premium custody fixes that. It's a closed-loop system. Crypto goes in, but withdrawals only come out as USD to your verified bank. Nobody can drain your wallet because there's no external wallet to drain. Assets are held one-to-one, off-balance sheet, with full tax reporting. And inside an iTrust IRA, gains can grow tax-deferred, or tax-free in a Roth. Real U.S. customer support. $100 bonus when you fund through the link below. Same market, smarter structure. Let's listen to Mark Yusko explain his outlook.
The idea here is, I was on CNBC in 2017. And literally, while I'm on the show, the price of Bitcoin went from like 10,000 to 8,000. It had one of those flash crashes. And Melissa Lee says, what should we do? And I'm like, buy it. And she's like, oh my God, you'd always say that. And I'm like, yeah, I would. Buy it today. Buy it tomorrow. Buy it next week. Buy it next month. Don't buy it all at once. And so you've seen the, Bitcoin is dead website, right? Now, 492 times since 2009, Bitcoin's been declared dead. If you bought $10 worth every single time, you'd have $86 million today. The key is, and you can't replicate that because those first 5 years don't really count. When it was fractions of a penny and $1 and then 20 cents, we're not going back there. But the concept of buy some today, some tomorrow, some next week, set it and forget it, dollar cost average, buy the dips. Don't sit around and wait for the dip. Just have some money go into it. Now, what's the one thing I will say about 401ks that is good? Every 2 weeks, you're buying the dip. Every 2 weeks, your money's going in. You can't change it. No one ever changed it. This is a crazy stat. When people set their asset allocation for their 401k on the first day of work, with advice from the HR person, who's not an investment person, by the way, and their choice is 1/n. If you have 10 choices, you put 10% in each. If you have 5 choices, you put 20% in each. That's the average asset allocation. It's never changed. No one ever rebalances. But at least every 2 weeks, you are buying, whether it's up, down, sideways, doesn't really matter. And that's what you should be doing with Bitcoin. So you should say, everyone has 3 buckets. The liquidity bucket to fund their lifestyle. Spending, right? Got to pay your bills, got to travel, it's your, I said 10 to 15%. Could do it with less, do it with more, but somewhere in that range, 10 to 15%. Then you got your get rich bucket. This is for the friend's condo deal, the brother-in-law's hot stock tip. I would say you're going to lose it all, so keep it small. You're probably not going to lose it all, but it's usually not high return. But sometimes it hits and it can make you rich. So you got your get rich bucket, but in the middle is your stay rich bucket. And your stay rich bucket should do just that. It should keep you rich, right? Once you earn the money, either from an investment or from your income, you should diversify it. And you should constantly be rebalancing and buying what's weak and selling what's dear. And so Bitcoin plays a role in that stay rich bucket, right? It's not a get rich quick. It's a stay not poor long term, right? And that's not said very well. And someone says it better, but it's about preserving your wealth from the ravages of inflation. I mean, here's the reality. I went to lunch the other day by myself, and the tip that I was shamed into giving was larger than what I used to pay for lunch 5 years ago. Now, it's the same restaurant, exact same restaurant. Food's the same. It's actually decent food. But that's not, the food didn't get better, didn't grow, didn't appreciate. It's the money got worse. And so having a plan and having a team that helps you, because there are many who say, I don't understand Bitcoin keys and seed phrases, and totally fine. I mean, see, actually, you asked Jackson what socks I'm wearing, so I'll show you. So I got the Bitcoin chill, go to the beach and chill.
I don't think we've seen those ones before.
Yeah, so put it in cold storage. So yes, in a perfect world, you would put your Bitcoin in cold storage and you'd hold your keys and it would be your keys, your coins. And look, compounding is the eighth wonder of the world, right? There is no more powerful force in the world than compounding. And it is what creates wealth is, investing, do it early and often. And again, you don't have to do a lot because a little seed starts to grow. And we all have seen the picture, right? If you start with a little circle and then you put ice on it and then you put more ice on it, suddenly it's a lot of ice as you get, the circumference of the circle bigger and bigger. And I mean, the radius and the circumference, but it's when you take a technology like Bitcoin, right, it's a technology for storing and exchanging value. And it's superior to all technology that came before it. And that doesn't mean that fractional reserve banking is bad. It doesn't mean that barter was bad. It doesn't mean that, paper ledgers were bad or electronic ledgers are bad. They serve their purpose. And now we have innovation. It's like CPUs aren't bad. GPUs are a little bit better at certain things, not at everything, but at certain things. And TPUs are even better than that. And then LPUs and VPUs and 3PUs and all the things that are going to come next.
What Yusko is describing is a shift in how Bitcoin should be viewed. Rather than treating it as a lottery ticket or a speculative gamble, he sees it increasingly becoming a component of what he calls a stay-rich portfolio. That distinction matters. A get-rich investment is something people buy, hoping for explosive short-term gains. A stay-rich investment is designed to protect purchasing power over years and decades. And that brings us to a problem that affects virtually everyone, whether they own Bitcoin or not: inflation. Most people notice inflation when groceries become more expensive, or when restaurant bills suddenly feel much higher than they did just a few years ago. But according to Yusko, the deeper issue is that inflation represents a continuous decline in the purchasing power of money itself. From his perspective, Bitcoin represents a technological innovation specifically designed to address that problem. Just as newer technologies eventually replace older and less efficient systems, Yusko believes Bitcoin is emerging as a superior system for storing and transferring value in a digital world. And that belief forms the foundation for his much larger prediction about where this market cycle could eventually lead.
So to wrap it all back, investing, have a portion in your savings. Bitcoin, gold, whatever it is, the thing that protects your wealth from fiat debasement. Those other things, money markets and GICs and guaranteed, they sell them as risk-free. No one, particularly young people, want risk-free. You want lots of risk defined as volatility. You want lots of volatility in lots of things that are uncorrelated to one another. So some zigs when the other zags. Without volatility, and all volatility is disagreement about a future state, you can't get returns. And again, the younger you are, the more volatility you want, so the higher your return is. And so you should overweight, and it's my pinned tweet on Twitter, right, is invest in innovation as an asset class. But the problem is, to invest in innovation, you have to invest in things that you believe in before others even understand. It's very uncomfortable and you'll be ridiculed. But here's the thing. The more you are ridiculed for investment ideas, the better they are. And the more intelligent the people telling you you're an idiot, the better they are. Because if everyone's agreeing with you, like buying SpaceX, it's already in the price.
Well, the good thing is we have several months between now and Thanksgiving where I'm sure we'll be back to the conversations of people saying that we're idiots for owning Bitcoin, given where the price is today.
No, by Thanksgiving, they're going to be, again, this Thanksgiving, we'll be back to, hey, you get 2 turkey legs this year because
wow,
we bought them October 5th, whatever. I'll give you a date. We bought them October 5th. Maybe we've already bought them, but October 5th is when we turn back up. Crypto spring will be here. We don't go straight to 150, but, the next stop between crypto spring and crypto summer will be, that 150 range. And then next cycle peak, which is in 2020, halvings in 28, so 29. So in 2029, the next cycle peak, 4s, probably has a 4 handle on it, but, all right. Until next time, when I'll change my mind, strong opinions loosely held, except for diversification. Diversification always works. But the one thing to remember, concentration makes you rich. Diversification keeps you rich. So if you're still in the get rich game, it's okay to have some concentrated bets. But don't be unhappy if some of them go to zero. Because if you don't have zeros, you're not taking enough risk in that small portion of your get rich bucket. So, for every zero, you maybe want to have a 10 bagger, a 20 bagger, a 100 bagger. But for the bulk of your stay rich bucket, don't speculate, don't gamble, just invest, work with people like this, and own some Bitcoin.
And don't gamble either.
And don't gamble. Please don't gamble. Well, now, again, take a small amount. If you like to gamble, if that's fun for you, just take a small amount and knock yourself out. But man, don't convince yourself that it's trading. Gambling is not trading. Gambling is not investing. Gambling is gambling. And know that the odds are against you. They are against you. No matter how smart you think you are, the odds are against you. Remember who's on the other side of the trade and think about how smart they are and why are they doing that. If you think it's a buy, why are they selling? And if you think it's a sell, why are they buying? So the worst investor in the professional class is probably going to take your lunch money if you gamble it away.
What makes this discussion particularly interesting is that Yusko's outlook isn't built solely around Bitcoin. It's built around a broader philosophy of investing. Throughout the interview, he repeatedly returns to the idea that wealth creation and wealth preservation require different approaches. Concentrated bets can sometimes generate extraordinary gains, but preserving those gains requires discipline, diversification, and a long-term perspective. His argument is that younger investors often underestimate the importance of volatility. Volatility feels uncomfortable, but historically it has also been the source of many of the market's largest opportunities. The challenge is having conviction before the crowd arrives. That's why Yusko emphasizes innovation as an asset class. The biggest winners often look risky, unpopular, or misunderstood in their early stages. By the time everyone agrees an investment is a great idea, much of the upside has already been captured. And that brings us back to Bitcoin. Despite growing institutional adoption, expanding regulatory clarity in many jurisdictions, and increasing recognition as a scarce digital asset, Bitcoin still remains highly controversial. Critics continue to dismiss it, while supporters argue that its role in the global financial system is only beginning to emerge. Yusko clearly falls into the second camp. His forecast suggests that if Bitcoin follows previous cycle patterns and continues benefiting from increasing adoption, the current period of uncertainty could eventually be remembered as another accumulation phase rather than the beginning of a prolonged decline. Of course, no prediction is guaranteed to be correct. Even Yusko openly acknowledges that investment opinions can change as new information emerges. But his broader message remains consistent: focus less on short-term noise, focus more on long-term ownership, and understand the difference between investing and gambling. The investors who ultimately benefit the most may not be the ones who perfectly time every market move. They may simply be the ones who stay patient while everyone else gets distracted. But what do you think? Is Mark Yusko right that crypto spring is approaching and Bitcoin could eventually revisit $150,000 before moving significantly higher in future cycles? Or do you think the market still faces major risks that investors are underestimating? Let us know your thoughts in the comments below. If you enjoyed this video, make sure to like, subscribe, and turn on notifications so you never miss our latest Bitcoin and crypto market updates. Thanks for watching, and we'll see you in the next one.